Hey guys, it's Paul Mackey here with Rebel Real Estate. In preparation for this evening's Bank of Canada announcement regarding interest rates, I've scheduled a call with Adam Bazuk with Dominion Lending. Adam has been a mortgage broker for 18 years and he services Toronto and surrounding areas. Adam is nationally recognized as the top mortgage broker for Dominion Lending and he's won numerous awards. He works with home buyers, home sellers, and real estate investors. So Adam's going to jump on and let us know what this means for you in the real estate market moving forward.
Hey, Paul. Adam here over at Dominion Lending. Thanks for a chance to speak to you and your clients briefly. I think it's pretty cool that you reached out on behalf of your clients just to get a sense of what's going on out there mortgage wise from a guy in the trenches like me. Look, I'm even in the trenches t-shirt today, working files, no time to put on the collar shirt for this discussion, so hopefully that's okay. But really good of you to always be looking out for your clients. Anyways, very briefly, a couple key things I wanted to get across to your clients right now in the current mortgage environment. Number one, probably never been a better time to get any current mortgages you have reviewed, especially if you haven't really had them looked at in the past couple of years, especially if you're coming up for renewal in 2023, 2024. Not many people want to come up for renewal in 2023 or 2024 if it can be helped and if it's a financially smart move to make a change. And so by getting a professional to do a current mortgage review, you can evaluate, does it make sense to absorb a penalty? Why has there never been a better time? Rates are still very low. Fixed rates have come up a bit, but still awesome. Variable rates, the discounts being offered are exceptional. And so you can get a really good contract for the next 5 years that'll take you to 2027. Add into the fact that rates are going up, so you'll be protected. And also the fact that property values are very good right now, loads of equity in many properties. So in looking at your overall financial picture, and maybe we're doing a new mortgage contract for you, we can look at other opportunities to leverage equity. Maybe you want to start or continue on an investment portfolio and pull out some funds for seed capital and down payments. Maybe you want to renovate your current home, invest in your current home. Maybe you want to consolidate some higher interest debt, which is good in every way, including qualifying for other things, down the road. Whatever those reasons may be, many people are finding themselves in excellent equity positions right now. So again, very good timing to get a mortgage review. There's also, it's also a very good time to get pre-approved with a 120-day rate hold if you are even remotely thinking of moving, shopping for a new home. I sort of emphasize that because we've been kind of spoiled for the past couple of years. Meaning, if you're someone who's in a strong situation, maybe you already know you're pre-approved and not bothering even talking to the bank till you find the house, or like we did with a lot of my customers over the past couple of years. They're out there shopping anyways. We do a workup, they're pre-approved, but we don't bother with the rate hold because rates have been so low for so long and staying low, and everyone knows they're going to stay low. Well, now everyone knows they're going to go up. And so if you're thinking of moving in May or June or July, rates will be higher. So by doing the work now, doesn't take long, and securing a 120-day rate hold, you're protected. If rates go up, you get the lower rate. Simple stuff, but get it done if you're thinking of moving. And we're telling all our agents to make sure they're advising their customers of this. And again, simple to get a rate hold, but do it if you're thinking of moving. The interesting thing too, I should go back on the current mortgage review, that you can do both things, meaning maybe you're 50-50 on the moving, but want to invest in your home just in case, or renovate and stay, or renovate and sell. A lot of people will redo the mortgage on their home and secure a great new rate till 2027. And one of the things we talk about is the transferability of that mortgage, the portability of that mortgage to the new house if they move. So they can secure the rate now, pull out some equity now for some now things. And then if they sell and move, they're going to avoid a penalty because we're going to bring that low rate with them over to the new house. And that's something that it is very possible, gets done a lot, and not a lot of people think of. The last thing I'll kind of talk about is fixed versus variable. So tonight we are expecting, or probably overnight, an increase to the prime rate. Probably a quarter point is what most people think, although the world's a little wonky right now with war and things like that, unfortunately. And so no one knows for sure, but it's probably going to be about a quarter point increase. And this will directly impact prime at the banks and therefore variable rates. Fixed rates have a mind of their own. They've already been going up a bit. They're still hovering around 3% for 5-year fixed at most banks, but they were much lower and they went up and prime stayed low. My main message is the fixed versus variable rate conversation is still a good one to have with a professional, and then make a choice that's right for you. For example, variable is still a very strong option. Large discounts off of prime being offered by the banks. And for people in, good financial situations, it's still recommended a lot. That being said, you can't really complain about a 5-year fixed rate at 3%. Well, you can, but probably shouldn't. And if it's going to help you sleep at night, you would go with that. I should mention, in previous years, people would get into variable rate mortgages. Was a good choice, but the discounts being offered, which is the prime minus whatever, weren't as good as they are right now. And you can get out of those mortgages very inexpensively. So compared to a fixed rate. So for example, maybe you have prime minus 0.2 or prime minus 0.4, and you can get prime minus 0.9 or prime minus 1% right now on a brand new 5-year contract. That's definitely, again, something you should look at. You can expect, depending on which economist you listen to, between 6 and 8 increases to the bank rate over the next 18 to 24 months. And in general, that still means that, believe it or not, rates will historically remain pretty darn low. But there's a number of things being analyzed right now, like affordability of homes and things like that, because of rising rates and rising home prices. And it's just important just to look out for number one, which is you. Because last time I checked, the banks are doing okay. And if there's an opportunity for you to save and set yourself up for success in the future, I think you should do it. So health and happiness to everyone listening. Thanks again, Paul. And I know if any of your clients would like to chat with me at greater lengths, I'm sure you can send them my way. I'd be happy to talk to them. Take care. Have a great night.